I'm going to show you how to use the fundamental analysis template that I've made. So if you haven't already, please view the previous video. In that video, I talk through the definitions of most of the terms used in this. And in this video, I'm going to actually go through how to analyze stocks. I'm going to use an example of a good stock fundamentally, and I'll use an example of a fundamentally bad stock so you can see the difference as well. Before I get started, let me just tell you that these dark blue squares, so for example, these are all things that you need to do yourself, whereas the light blue ones, they will automatically be populated, so you don't need to do anything. Just make sure you don't accidentally get rid of these squares when resetting your track template. The other thing is you've got some websites here, you've got some definitions here in writing, all in one page. And over here, you've got a live sector average PE, so price to earnings ratio. So you don't need to search online for it. It's all here. This automatically gets updated every day. So everything more or less is in one place. And I'll show you how to get the other information. So the example I'm going to use in this first example I do is NVIDIA, because that seems to be everyone's favorite stock at the moment. And not going to lie, fundamentally it is very good. So all I did was I entered the ticker into the ticker section. And as you can see, some of the data already filled out. So you've got the company name, you've got the last 365 days trend, so the last year, you've got the current price, you've got the market cap, and then you've got the PE ratio as well. So on its own, this means nothing. And in terms of market cap, lots of people invest in market caps, different market caps. Some people tend to go for small market caps because there's more opportunity for upside potential. However, they don't really look at the downside potential. So my advice when it comes to market cap is try to stick to companies that are $10 billion and above in market cap. Anything smaller than that is too small and it's going to be too volatile. It's too risky. The risk reward doesn't add up. This one, NVIDIA is almost a $3 trillion company. So in terms of market cap, I think it is the biggest or the second biggest company in the world right now. So it is fairly safe to invest in. The current price is $121. And let me just put, it's a technology stock as well. So you've got the sector in there as well. PE ratio is on the higher side, but you've got to compare that to the sector average. So if I go on technology here, 39 is the average. So even then, currently, it's above the average. The next thing I would do, so you can see I've split screened. I mainly use three websites, so TradingView, FinViz, and IBKR, and they tend to go through everything that I need. So if I start with TradingView, if I just search for NVIDIA, it will give me most of the things I need. So I search for NVIDIA, you've got it over here. Then you can go on financials, and you've got a lot of information in this section. So the first thing I do is I scroll down to this section here. So it tells me how much debt the company has, and it shows me the market cap. So the first thing I do is I work out what is this debt compared to this market cap as a percentage. And if I just get the calculator on my phone, I'll work that out with you. So that's divided by 2.98, and that works out. So it's about a 0.3% debt. So that's really good. That's a very low debt. Most companies, they have debts of like over 20%, 30%, and you can make your own cutoff for this. But for myself, anything more than 20 is borderline, and anything over 30 definitely is a no zone for me. So 0.3% is absolutely perfect in this section. Then I continue scrolling down, and I look at this bit, the growth and profitability. So you can see here there's a tab that says annual and there's a tab that says quarterly. So if I start with annual, I like to see first of all the revenue, which is the first question here, the trend in the revenue. So I look over the last few years, what's the trend in the revenue been? And to me, that trend is up. So I write up. The next thing I do is the net income. So the net income is this light blue color, And if I look at that, it's been flat, but it's increased. So again, I just put up because overall, I think it's still increased. And if I put my mouse on here, show me the actual numbers. So you got 2.8 billion, then you got 4.3, then you got 9.75, then you got 4.37, then you got 29. So generally, it has increased year on year. Just maybe this one is the one that stands out a bit. So that's the only one that's question mark. So if I ignore that, then generally it's up. Then I look at the net margin, so the actual percentage profit that these guys are making. NVIDIA in 2019, they were making 25% margins, 26%, 36%, 16% a couple of years ago, and now it's almost 50% profit. So almost 50% of the money that they make, they pocket. And if you look, the overall trend is up as well. So I'll put that as up. Then I just write an average number that I think. So if you got 50% here, 16%, 36, 25, 25, roughly it's about 30% they're making year on year, every year. So I'd put 30% here. The next thing I do is the exact same thing, but I switch to quarterly and I do that. The reason I do that is because this data here is from 2019 to 2023. We've almost finished 2024 and there's nothing for 2024. That's why if I switch to quarterly, you've got the end of 2023 over here. You've got the first few quarters of 2024 as well. So you've got more recent data as well. So here, same question. So if I start with the revenue again, so that to me, the blue lines, they're going up, the blue bars. And even if you look at the numbers, 13 to 18 to 22, 26, 30, that's going up. So the trend is up. Then you've got the net income. And to me, also this is increasing as well. So that's up. The next thing is margins. Again, the margin, the trend is up. Like on average here, you're talking about 50%. So it's crazy. So it's up and we'll say 50%. Yeah. So then I continue scrolling down. And the next question is about debt. If you look here. So if I scroll down, you've got the debt over here. So the debt is the red line, the red bars here, and it has been going up, but the last 3 years it's been flattened out. If anything, it's going down. So it's gone from 11 to 12 to 11. So it's pretty flat. So if I look at overall, I'd probably say flat. And then if I switched up to quarterly, that's pretty flat to me as well. It looks flat. The next thing I look at is the free cash flow. So you can see that these guys' free cash flow now is crazy. The overall trend, so it has been increasing. Again, this one's the one that stands out. But if you ignore that and just focus on the overall trend, then it's up. So when doing this, look at the overall trend. If there's only just one that goes against it or anything, then ignore that. But if it's like 3 or even more, then obviously there is no trend. You have to look at it again properly. But here it's just one, so I'm just ignoring that. And the following year they recovered. And then if I switch to quarterly, that the trend is up as well. It's coming down now, but again, this is just one result. So that's why I'm going to ignore that. If the next quarter again is down, then I think NVIDIA's on the trend starts becoming down. But currently, I'd still say it's up. The next thing I would do then is I'd scroll back to the top here because it asks about gross margins. And for that, I go onto the company statements, which is over here. And you can just see how much it's grown over the last few years. Like even looking at the total revenue, look at that, just crazy growth in the last couple of years. But here we're looking at the gross margin. So we're looking at the revenue and we're looking at the gross profit and we're seeing like the gap between them. Is it going up the same amount roughly, or is the gross margins like significantly lower? But to me, the gross margins is going up. So the blue line, the blue bar, that's going up. So I'll put up. And then if I switch to quarterly, again, to me, that's going up. So NVIDIA as a company, they're smashing it. So yeah, so I've seen the past trends in summary, and they've been doing good. This year, like recent quarters as well, they've been doing really good. The next question is, we need to look forward now. So if I go to the earnings tab over here, and if I switch this to annual first, so you've got the earnings per share here, and then you've got the revenue over here. So the question here is, has the past earnings per share been met? So if I look at it, the blue color is what they actually got, and the gray color is what was estimated. Now, over the last few years since 2017, it has been hitting, it's been in line annually. So I'll do in line. And then if I switch that to quarterly, it's been in line, but they've actually been smashing it, like almost 10% more, 12% more. So they've been smashing it recently. So they've been multiple exceeds rather than just in line, it's multiple exceeds. Okay, so now I'm going to look at the revenue, which is this one over here. So again, past revenues met. Yes, it has been. It's been in line. This one smashed it quite a bit. Well, it's only 2% more. Well, it's been doing well, so I'll put it in line. And if I switch to quarterly, these guys have been smashing their revenue estimates. So it's actually been exceeding it by quite a bit. It's not just in line. So again, I'd put multiple exceeds here. So now the next question is, what is the trend in the future EPS forecast? So the reason we looked at the past is because if they've been meeting their estimates in the past, then you'd be confident that they'd meet their estimates for the future. And on the other hand, if they were missing all their estimates in the past, you wouldn't be too confident going forwards. So from going forwards, I'd mainly focus on the next couple of years rather than that far forward, because a lot of things can change. But generally speaking, if I look at the trend going forwards, it's still up. And if I look at the revenue trend as well, that's up as well. If I switch to quarterly on both of them, again, earnings per share is up and revenue is up. So I'll put up for both of these. So they're smashing it, NVIDIA smashing it. Then the next question is, are they buying back their shares? So for this, I use a website called Finviz. There's many ways to do it, but this is a way that I found out is free to do. So if we can do it for free, then why not? So Finviz is very good. It's got a lot of data for companies. So here we've got NVIDIA. And you can see it has AI algorithm built in, and it gives like technical analysis. So if you're really bad with technical analysis, you can pretty much, I don't know how reliable this is, but you can have a look at this and have a play around, see what you can do. So it's got a lot of data here. You've got things like the PEG ratio and things like that. Now, if I scroll to the statements, and you can see here shares outstanding, and you've got numbers next to it, and to view the full chart you have to pay for it. But if you just zoom in, before I do that, let me just switch this to it's on annual, so that's fine. So if I just zoom into this, so as you can see, shares outstanding, I can see it's pretty flat. So the amount of shares that's out there is roughly the same. So let's just say flat. On the other hand, if this was going up, the bars were getting bigger, that means they're diluting their shares. That means they're adding more shares to the market, which means the value of your shares go down. Simple supply and demand. Like if the supply of something increases, then the demand goes lower. And if this was going down, that means they're buying back their shares. And that's a good sign, because if a company is buying back their own shares, it's a good sign that the CEO or whoever believes in their company. So let me just zoom out and let me switch to quarterly. And if I switch to quarterly and I zoom in, again, it looks flat to me. So that's fine. The next thing is the dividend conversion ratio. And I'm going to go back to TradingView for this. And what this means is you got the dividends per share that they normally pay divided by the earnings per share that they earn. So if I work this out, you've got the earnings per share over here, So they make 2.15 dollars per share. And if I scroll down, in the last year, their dividends per share was 2 cents. So the calculation would be 0.02 divided by, let's see, divided by 2.15. And the answer is literally less than 0.001. 0.001. So that's the ratio. Now, generally speaking, anything less than 1. Oh, sorry, I think I done something wrong there. I just realized it's the earnings per share divided by the dividends. So I'm going to change this, but it's the EPS divided by the DPS, 0.02, and the answer is 107. Sorry, that's my mistake. So anything less than 1 means that it's unsustainable because they're going to be paying out more than they earn in dividends, and financially it's going to make a loss for that company. The next thing is the PEG ratio. So anything less than 1 is very good. And if it's in the bull market, it's hard to find something less than 1. But if you can, then great. As you can see, the PEG ratio is 1.09. So it's not bad. Very good, actually. So I've put that here. You've got the current ratio as well, which is 4.27. And remember, to just a reminder of what all this means. This means that their assets, they have more assets than they do liabilities. So if they do need to sell things, they have money available as soon as possible. Their quick ratio is also 3.79. So yeah, NVIDIA as a company, they're smashing it. And because the market cap's so big, I'd say it's a fairly low risk stock. But for the sake of this, I'm going to put moderate risk because the price has been volatile over the last year. So I'll put moderate risk. The next few things is the economic moat and the Morningstar fair value. So if I go on the next page, let me just log in, sorry, give me 1 second. Yeah. So with Interactive Brokers, I've got opened an ISA account, but I've not deposited any money because I don't really use it. I find it like I'm happy with trading 212, so I'm not really using it. But if I just search for the Morningstar, sorry, not Morningstar, NVIDIA, it's got a lot of free data, including the Morningstar valuations. So if I click on fundamentals here, and if I just click an arrow on this, it gives me a full report from Morningstar. So I can click on any of these. All of this is by Morningstar, so it gives me information about the company. So you can see here it's a wide economic mode, which is very good. And it's saying that the fair value is $105. So I'll put that there. And then because I've put this as a moderate risk stock, I'm going to put a 15% safety margin, meaning that the price that I'd be buying at is if NVIDIA drops to $89 or below, I'd be a buyer of it. So if I was following simply Morningstar and this valuation, that's the price I'd be looking at. Whether it gets there or not, I don't know. Only time will tell. Now, how do you interpret this then? So you've filled out this template. What does it all actually mean? So what this means is you've got everything all on one page. So everything that you, in my opinion, that you need to know about a company before investing, you've got it on one page. And as you can see, majority of it is green. Now this tells me that NVIDIA is a very, very good company. And if there's anything red or yellow, these are things where maybe like it can improve on. So for example, the PE ratio is crazy high, it's 57, much higher than the sector average. But if you couple that with the PEG ratio and you take into account their growth, it's actually fairly reasonable at the moment. But then if you look at the debt levels, it's flat. They're not really buying back any shares. But let me tell you one thing, no stock is going to be fully green. Nothing you're not going to find a stock where everything is fully perfect. It's not going to happen. So in this sort of situation, you have to decide to yourself what's important to you and what are you willing to compromise on, and how would you manage your risk. Now, for me, something like debt is very important. If it's got a very high debt, I'm not interested. And as you can see here, NVIDIA's got a low debt. On the other hand, you've got things like the revenue. Is it increasing? That's important to me. If I'm investing in a growth company, I need to be confident that the revenue is increasing. And same with the margins as well. There's no point earning a lot of money, but then if you're like wasting a lot of the money, then there's no point. So things like that is important to me, and it helps me make a decision. If a lot of this was green, which it is, I'd be confident in putting more money in than I would if a lot of things were red. So it also gives me an idea for risk management as well, because that's a very important part of investing. So that's the example of NVIDIA done. I'm now going to show you an example of a stock which is not as good.